Okay, good morning to Anula present here. Today we are going to take into account the financial insurance services. Today we are going to take into account the financial insurance services, Unit 1, Session 1. So, what is financial services? Uh, all the allied activities related to finance are called financial services. Okay? Banking finance, okay, loans, insurance, renting companies, okay, all these are coming under financial services. So first we will take into example. There is a family, okay, and family has needs and wants. So a family wants additional level of products for their homes like sofa, TV, and other electrical items. So what they do is they go and purchase in a local vendors. So what is local vendor do is he is a business person. Okay, he sees that opportunity available in the middle class family for the products. So he's manufacturing all the household items, specifically related to furnitures. So what as a businessman he does is he has an idea that through his funds, tools, raw materials, and labor, he can create the materials required for the family. So he makes the products in his factory and shifts to the market. From that market, this from the market, the product will be bought by the homes. So if you take a basic household income of an individual family, okay, first clothing around 5,000 rupees, and the food and materials around 2,500, home rent on maintenance around 10,000 rupees, children's education around 10,000 rupees, medicine 2,000 rupees, and additional if any unwanted health crisis happens, it will be 50,000 rupees. So this is the just a breakage of various expenses of a family. So, if you take into account, except for the financial constraints, individual salary will be around 20,500 rupees. Okay, but if you take a business person count, he will be producing lot of goods and services. So, as an individual, he will be buying a product and he will be paying. In that term, the business person will be getting a profit. So, if you take into account, let's say about individual person, individual persons will be having a wages. From wages, you will be deducting expenditure. Then after expenditure, income tax, interest, and other things, you will be getting a disposable income. Whereas for a business person, sales from sales, all the costs are deducted. From cost deduction, he gets a profit. So whenever we are talking about disposable income or a profit, all the money will be moving through banks only. Okay. So if all the process, all the monies are moving from banks, this is all the services related to finance is called financial services, like banks, insurance, mutual funds, and other financial instruments. So whenever you're talking about bank, if the consumers are buying product from the business person and business person is getting profit, it's called direct finance. But if the same individual is borrowing money from a bank to start a business, it's called indirect finance. So first we will see what is the meaning and definition of a financial system. Financial system is a complex, well-integrated set of subsystems of financial institution, markets, instruments, and services which facilitate the transfer and allocation of funds efficiently and effectively. What are the financial structures and institutions? There are various forms of financial institution and systems in India. One is financial institutions, financial markets, financial instruments, and financial services. So these are the basic differentiation of different forms of financial system in India. First, we will take into financial institution. If you take financial institutions, one is banking institution and non-banking institution. If you again subdivide the banking institution, it can be divided into commercial banks, cooperative banks, rural bank, and foreign banks. And again, commercial banks are subdivided into private banks and public banks. Let's take about financial markets. Financial markets again is divided into two: unorganized sector and organized sector. Under organized sector, we have capital market and money market. Under capital market, again we can divide into secondary market and primary market. Then we have various financial instruments. Apart from that, we have financial services also. Financial services can be divided into two things: fund based, fees based. If you take fund based, various services provided by the fund based companies are leasing, hire purchase, consumer credit, discounting, factoring. Okay, if you take fees based, we got merchant banking, investment banking, credit rating, debt restructuring, and brokering, etc. Okay. Okay, what is financial institutions? Financial institutions are participant in a financial market. They collect resource, that is money, by accepting deposit from individual and institution and letting them to trade, industry and others. On the basis of nature of activity, financial institution may be classified as regulatory and promotional institution, banking institution and non-banking institutions. Okay, types of financial institution and intermediates. Okay, regulation and promotional institutions. Financial institutions, financial markets, financial instruments, and financial service are all regulated by regulators like Ministry of Finance, Company Law Board, RBI, SEBI, IRDA, Department of Economic Affairs, and Department of Company Affairs. And banking institution mobilize the savings of the people. They are the three basic categories of financial institutions. They are commercial banks, cooperative banks, and development banks. Non-banking financial institutions. Non-banking financial institutions also mobilize financial resource directly or indirectly from the people. Companies like LIC, GIC, UTI, Development Financial Institution, Organization of Pension and Provident Funds fall into this category. Non-banking financial institution can be categorized as investment companies, housing companies, leasing companies, hire purchase companies, and specialized companies. Okay, so these are the few financial intermediates we have. So banking, if you take, it is coming under okay. Banking, RBI, commercial banks, cooperative banks, post office, savings banks. Non-banking, LIC, GIC, UTI, housing development financial companies, and development, ICICI, IDBI, IFCI, NABARD, SEBI, Tourism Finance Corporation of India, SFCs, and regulatory institutions like SEBI, RBI, IRDA, and BIFR. Thank you.